Todd, day two of Bitcoin futures. I mean, day one went off pretty smoothly, didn't it?
I think it did. And if you look, we had a little bit of a beginning a week ago at the SIBO. They opened up to this week. We have it at the CME Group. So it's opening the door to investors here. The key to the Bitcoin futures is this. You don't actually own the Bitcoin. So you can sell the Bitcoin. It trades off an index. You can participate in the market without actually having to go through the process of buying and selling Bitcoin. So I think it's really going to open the door to a number of investors who maybe aren't sure about the cryptocurrency as a viable way of transactions, but more or less want to participate in the market itself. And I think that's why we're going to see this market probably really grow as we head into 2018.
And of course, it opens Bitcoin up to shorting opportunities, doesn't it, Todd? Would you short something with so much momentum, upward momentum?
Well, I think that right now when you look at Bitcoin and when people are asked, what do you think the top price is for Bitcoin? And the overwhelming answer is either I don't know or there is none. It makes it very difficult to want to step in front of that. That being said, a market that really sees volatility swings like Bitcoin does offer two-way trade. So yes, there is opportunity to trade it not only against the index, but if you're long the underlying, this is a good way to possibly trade around your position. So I think there is opportunity to sell. To be naked short Bitcoin at this point, though, I think is probably something I would take a second look at before jumping in with both feet.
Todd, we've got the stockpile data tomorrow on the oil front. Is oil in a bullish trend through the end of the year?
Yeah, I think it is. And there's a couple reasons why. I think that the OPEC trade right now continues to kind of nudge us higher as they continue to hold back on some of their production, and they get participation from not only OPEC but non-OPEC members. And $60 seems to be their target. The second part is going to be demand. And this has to come with, do you believe that OPEC's demand numbers versus the EIA's demand numbers? Because right now they're both kind of a little bit off where OPEC sees stronger demand. And that makes the U.S. really the wild card here as far as production goes. Will the fracking make up the difference? So I think we are definitely in an upside, but 60 is going to be a top at least for the short term until we get through some of these supply numbers, until we really see what the U.S. production levels are going to be in 2018.